Sudip Bandyopadhyay also joins us on the show. Sudip, not sure if you got the chance to look at the numbers of ACC so far, but there's a bit of a rub-off impact happening on the likes of JK Cement. Ambuja Cement is also perking up, and Ultratech Cements too were largely in line to slightly better than expectations. What's your view on the cement pack as a whole? Because on real estate, things have started to look a bit wobbly. At least that is what a couple of analysts have said and downgraded that sector. What about cement now?
Good afternoon, Anisha. Well, I think cement and real estate needs to be looked slightly differently. Real estate, there is a bit of a challenge in pockets because of multiple reasons. And one of the reasons for the challenge in real estate is it cannot stand on one leg for a very long time. The high-end real estate has been moving and moving very, very fast. That's what has been keeping the real estate sector buzzing. But the mid and lower income segments have been suffering. And I think one of the reasons is high interest costs. As and when the interest costs start coming down in the economy, I think those segments also will pick up. And there will be, once again, I think, positive movement in real estate stocks we will start witnessing. As far as cement is concerned, this goes much beyond the real estate. I think there is a construction boom. There is a lot of infrastructure work happening. Railways are making major capex, and that in most of the cases also involves use of cement. So by and large, in the economy, the use of cement, the demand for cement is generally going up, and that will continue to go up in the near future as well. And that's pretty a strong belief we hold. Under the circumstances, while new supply will be coming, but it's a matter of time. But in spite of that, the established players, the guys with capacity, particularly capacity in regions where there are a bit of demand-supply gap, will continue to do well. As far as the larger cement players, we definitely like Ultratech, and I think being the industry leader, I think it's got a long way to go even from here. As far as Ambuja ACC is concerned, there is absolutely no problem for a long-term investor from looking at Ambuja ACC also at current levels.
That's cement looking mighty strong, 10% higher already on ACC as we speak right now. In fact, let's bring up some of the other cement plays as well and see whether the strength is rubbing off on the other cement basket too. We should bring up the likes of Ambuja, India Cement, Shree Cement, etc. Ultratech too. Doesn't seem to be the case. The smaller ones though, like a JK Cement, India Cement, of course, are perking up very, very smartly indeed. Kunal, what's the reading on the charts? A big spurt on India Cement, pretty much coinciding with the likes of ACC too.
Yeah, I think it's got to do with, we started off with ACC and Ambuja Cement initially moving up higher, the stocks breaking the swing highs. I think the move is now trickling to the other cement stocks. Particularly for India Cement, the stock is still trading into a range, and the range is quite broad for India Cement because I think on the support side, the stock over the last couple of days was just at a breaking distance below the 200 moving average, so it's managed to avert that by bouncing off from 235 levels. 200 DMA for the stock is closer to 225 for India Cement, and on the upside we've seen the stock taking resistance multiple times at 275 mark, so which means broadly we are looking at a 30-40 point range for India Cement. So 235 to 225 could be a range of support or maybe a zone to accumulate further, and on the upside we could be looking at 277 as a target, assuming the cement rally continues for many of the large cap names. That could also have positive effect on stocks like India Cement.
Okay, so that's a take on the cement stock, but Zomato is one stock which is perking up. The news for you at the bottom of the screen seems like that the company has got the approval now as a payment aggregator. Not really sure of what would be the impact on the counter as such over the long term, but the stock is reacting. Kush, if I can bring you in the discussion here, as far as Zomato is concerned, what are the levels that you're watching out for on the stock price, and even Motilal Oswal, because for the last couple of days, that's been trending on high volumes?
To begin with, I think we should look past the recent high that Zomato made, which is close to 141, 142 kind of levels, and the stocks actually are trending up beautifully, taking rather much needed breaks along the way, so that it's not a spike up, but a gradual uptrend. So I think we're looking at anywhere from 145 to 155 kind of an up move on this in the near term, and the support's very strongly placed at its 20-day moving average, which the stock has respected for the most part, which is close to 132. So it's due, a breakout, a sharp and steady move, could come around, anytime, especially if the market stabilizes. Now, as far as Motilal Oswal goes, I think there are some of the other names as well, like Angel One, that have been doing well. A couple of other names which are actually ready to break out in this space. Motilal Oswal has been doing well. I think even this stock could actually make a dash towards 2000, if we're talking positional bets here. And on the downside, 1600 is a resistance zone, which the stock has crossed, so will now start acting as a support zone. So from a risk reward perspective, after a breakout, I think Motilal Oswal also looks like a good accumulation candidate.
But you know what? There are lots of earnings lined up. Of course, we'll get the numbers of JSW Steel later today as well. But come Monday, it'll be all about ITC. So JSW Steel numbers are actually on the screen as we speak. So the profitability has come in closer to what the street was expecting. I think the number is just around that mark. So we'll get more details as far as JSW Steel is concerned. It's perking up as we speak, 2,000 crore thereabouts versus 1,700 crores, what the street was expecting. But we also have ITC that will report its numbers come Monday. So let me quickly take it across to Winnie before we dissect the numbers of JSW Steel further. Winnie, tell us what the expectations are from ITC.
So absolutely, in terms of numbers that we're expecting from ITC this time around, revenue is expected to see a muted growth of around 2 to 3% is what we could say. Nothing exciting in terms of numbers that is expected from ITC. In terms of margins, a contraction in terms of margins because of the raw material pricing that is still impacting the margins of the company. So EBITDA margin expected at 37.7% versus 38.4% last year. Cigarette volume growth, a key number that we watch out for, expected to come in at 2%. Let's not forget the higher base that was there also in the last year as well. Other than that, hotels business is expected to see a good growth this time as well. Festive season, wedding season, all that does support the hotel business growth. Agri business, paper business continuing to see a bit of a pressure this time around as well, and we are expecting that pressure to be building on in this quarter for both these businesses, around a 7-8% slip in terms of the sales of both these segments. FMCG business, that's the one we're keeping an eye out on. High single-digit growth is expected. Food categories expected to fare better than the BPC category. Cigarette EBIT margin, that's the one maybe that is expected to remain a bit flattish as well. So in terms of key commentaries, we're watching out for the cigarette volume growth, demand trend outlook that is there coming in overall for the business, hotel business growth, and where the process is reaching in terms of the demerger, as well as outlook for FMCG, agri, paper, segment-wise outlook, key factors to watch out for.
Okay, important news from Cipla, and we should try and address that. I don't know if Srishti is mic'd up live with us. Maybe she can as well address that. But Samina Hamid is going to continue as a non-executive director and liable to retire by rotation. But I think she stepped down as the executive vice chairperson effective March 31st. This, of course, comes in the backdrop of, there were news reports doing the rounds that perhaps the Cipla promoter family's stake is on the block, and there were some interested parties wherein the names were being contemplated. So important clarification coming into that extent. The stock, of course, is seeing quite a bit of knockdown, down about 3.5%. And to be fair, Cipla has been weak from the word go today. It's not like a sudden reaction that you're seeing in the stock price. But the other weak link today has also been Balkrishna Industries. Let me take it across to Srishti and get in more perspective on the same, because there's been cautious commentary, Srishti, coming in from the management.
Well, yes, Balakrishna Industries seem to be under pressure because this time around the company has given no guidance, because every time with the earnings, we did see the guidance coming in from Balakrishna Industries. Is given the uncertain environment, especially for the overseas market, the company has not given a guidance this time around, and which is definitely not making the investors happy. The company's management says that it is too early to comment on the volume guidance for FY25. They are already sitting on backlogs of the geopolitical tensions. The geopolitical situations may also impact the margins in the short term, as well as what the company has highlighted. A couple of other near-term risks for the company is the increase in the freight cost, because the shipping cost scenario, the inventory may slip to the uncomfortable levels, and there could be some costs that could go up when it comes to the freight rates. Now, no price hikes that has been taken by the company in Q3, so there's no push on the margin front, as well on the back of the price hikes. But apart from that, the company also says that it can take another 2 quarters to actually pass on the cost to the customers. Along with that, they don't see any cost benefit going ahead. So clearly there could be some concerns regarding the margin pressure, is what the company has already highlighted. But all in all, onto the volume front, that is a bit stable in terms of the commentary from the company, because Q4 volumes are expected to be flat compared to the last year. The overall volumes will increase going ahead, and the Europe is expected to kick in the times ahead, is what the company is confident about, and they are also seeing some stabilization in the demand, and that is seen to be improving. So all these factors were at play for Balakrishna Industries, but no guidance given this time is definitely a big dampener for the stock as well as investors' confidence.
Okay, thanks for that. So Balakrishna Industries down about 7%, but just wanted to reiterate the numbers that were coming in from JSW Steel. Optically speaking, they do look better than expectation. The profitability coming at 2,400 crores versus expectation of 1,700, while the revenue is a bit lower. So the complete beat has been driven by the margin performance, because the EBITDA margin has come in at 17%, and that is something which is actually driving the performance of the stock right now, holding up with a gain of around 0.5%. So we have seen a bit of a reaction there. Kush, if I can come to you and quickly take your view on JSW Steel, which is reacting a bit, and Cipla as well. Of course, there's a bit of a reaction on the news flow, but on the charts, what would you recommend?
So on JSW Steel, the stock was in a downturn, attempted a rebound in today's the second day, but I think there is some selling pressure at higher levels of 820 and then about 830. So I'd give it a miss until, the 830 level is taken out. That is on JSW Steel. As far as Cipla goes, again, the stocks, turned a bit, and there's also a gap. So I suppose, there'll be a gap filling process that might happen. Perhaps this could be a trigger for it. So 1330 is, I think, where the stock could slip to and perhaps halt. So even this one, from a buying perspective, I'd give it a miss. 1330 is where I would consider buying, if this fall at all stops.
That's the take coming in on Cipla right now. In the meantime, let's just also take stock of what else has been happening in the market. ICICI Bank is actually perked up. It's now holding up about almost 0.5%. So it's definitely holding at the high point of the day, 1.25% actually, quite a bit of spike up. Any improvement in HDFC Bank? Not quite. SBI is still down about almost 1.6% as we speak. There you go, HDFC Bank, even though it's lifted off a little bit from the day's lows, as has been the case with SBI, but not a material move regardless. But yes, ICICI Bank chugging along quite nicely. There's, of course, Reliance also holding out by about almost 0.5% as we speak right now. Kunal, for the week ahead, considering this is going to be a long weekend for us, well, the world will trade, what are the key indicators that you would look out for on Monday morning?
So I think not too much in terms of negativity other than rollovers. I think that's the only data which you'll be looking out for, because that would probably determine that whether the weakness in the or rather the underperformance in the bank Nifty and the short creations over there, whether that gets rolled it over to the Feb series or not. The other data point which has been a bit intriguing is the less amount of premium for the February futures for both the Nifty and the Bank Nifty as compared to what we've seen witnessed for a large part of 2023. Now that could probably be a temporary phenomena, or whether it's a phenomena which could probably impact the index trends going forward. That's the other way to look out for. But when we look at the global context, I think Dow as well as the most of the global indices, Nikkei, etc., they're going through a very strong uptrend for themselves. So I think we are in the midst where possibly the global markets are heading up higher from current levels. There have been good amount of data points from the global rally perspective as well, that the mid cap and the small cap index have started to show signs of bottom formation and participation, which was not the case in, I think, the entire 2023 for the global market. So things are getting a lot more better for the global arena, and that's why I would believe that our market correction could get a lot more curtailed than what we would probably have anticipated had it been just a large cap correction, what we've seen for HDFC Bank, etc.
Okay, point taken. So that's the move on some of the stocks. But do remember, this series hasn't been that great for the markets. We have seen cut of almost 2% on the Nifty, and Nifty Bank has shed almost 7 to 8% this series as well. So we started off saying that Jan seasonality is likely to come at play, and that's exactly how it has worked out. Though at least for now, we are recovering a bit. JSW Steel has actually slipped into the red again. Let's take it across to Ashesha to get more details on it. Ashesha, was there any one-off on the profitability front? That's why the number looked that inflated at 2,400 odd crores, or is it a pure margin beat at play?
Margin beat is what has come through after a strong set of numbers from Tata Steel. JSW Steel has also reported strong set of numbers. Revenues are slightly below what we were working with, but margins have come in as a big beat. EBITDA has come in at 7,180 odd crores. On a sequential basis, it is a decline. Margins have come in at 7.1% versus expectations of 15.6%. And on a sequential basis, margins were at 17.7%. But we were working with a margin contraction. It is been lower than what we were working with. So definitely a strong set of numbers that have come in from JSW Steel.
So that's the take as far as JSW Steel stock is concerned. But of course, we have numbers from Bajaj Finance as well, which are expected on Monday. But before I, get into the expectations of that, wanted your take as well, Sudip, regarding the entire NBFC space, because there's again this debate of banks versus NBFCs with the kind of weak numbers that we have seen from the private banks. Which side of the debate are you tilted towards? Would you rather play through NBFCs or private banks, given the values there on the table now?
Well, I think I will like to play through the private banks very clearly. NBFCs have a bit of a challenge. The cost of funds have moved up. The liquidity is not that abundant. And with RBI kind of looking down upon the unsecured lending part as well as the algo-based lending part, I think a lot of NBFCs which were engaged in unsecured lending as well as algo-based lending will have to change the business model and tweak it. I was hearing to the SBFC finance CFO talking, and I think they have moved out of unsecured lending pretty much completely. Only about 1-2% of their book continues to remain unsecured. So I think this shift will take a little time, and it will be margin dilutive because margins probably will come down. And that's what we are expecting as far as NBFC sector as a whole. So we'll wait and watch. As far as private sector banks are concerned, I think there are pockets of opportunity and there are pockets of very good performance as well. I will like to single out IndusInd Bank. I think that's one bank which definitely stands out, and quarter on quarter they have been performing very well. Of course, ICICI Bank has been outstanding performance for the last 7-8 quarters, beating on all the parameters. Whatever the expectations are, they are beating continuously. So it's a great performance. Can it go up from here also? I think yes. The way the performance is shaping up, the way the credit demand is shaping up, I think we can. The challenge as far as HDFC Bank is concerned is on the deposit mobilization front. Traditionally, fourth quarter is a better quarter for deposit mobilization. So I'm pretty hopeful of HDFC Bank showing much better performance in Q4. And I won't be surprised if the stock also turns around at some point in time. And we probably have seen the bottom as far as HDFC Bank is concerned.
Right. Okay, Sudip, great to have you on the show. We'll let you go on that note.